Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel and Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how market makers and traders are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups, entries, and exits. And on-topic questions and comments are welcome, and I will be watching the Options-Doug chat channel and Discord, and also the chat in YouTube for your questions and comments. So again, please post your questions and comments. All right, let's get started. So what I want to cover today, my agenda for today, is to go over news, economic data, just a quick recap of yesterday, and then talk about news, economic data coming out for the rest of this week. And of course, the big event was yesterday with the FOMC announcement, and then a surprise comment that I'll talk about in just a minute or two. And the next thing that I want to go over is our positional analysis, and then finally I'll talk about some setups. Okay, so yesterday, of course, was the FOMC announcement. The FOMC announcement and also the press conference. So the announcement at 2 p.m. and then the press conference began at 2:30 p.m. And initially it seemed like the markets liked what Powell had to say, and they in the press conference, and markets rallied higher. This is a screenshot from yesterday, and this is QQQ, and I'm going to show SPY and IWM as well. So here is 4:30, the press conference begins. Markets drop, then reverse higher, and then apparently everything that I read, the news outlet CNBC attributed this large drop to a comment that Janet Yellen made, Secretary of Treasury, regarding FDIC deposit insurance. So anyway, the interesting thing here is this is QQQ, and we'll look at SPY and IWM as well. Note the high point of the day, the reversal at the 315 call wall. And recall yesterday the QQQ call wall had shifted up from 310 to 315. So that was yesterday. So that's QQQ. And then at the same time, Here's SPY. And notice anything similar here. The reversal at the 402 level, and this is the 402 call wall. So 2 for 2 reversals at the call wall. And the call wall, for those of you who may not be familiar, is the strike with the largest net positive gamma, and especially for an index, it typically acts as resistance. So both QQQ and SPY, the call walls acted as resistance as expected. And a spectacular trade would have been to buy a put in either instrument at these levels. So there's SPY, again, the same time, reversal at the call wall. And then finally, I don't have IWM up in Bookmap in my main computer. So this is from Thinkorswim. And the labels are not shown here, but the call wall for IWM was 177, this level right here. And there's the reversal at around 245 as Janet Yellen made her comment. So that's 3 for 3 for the indices. IWM, SPY, and QQQ all reverse lower at the call walls. Again, the strike with the largest net positive gamma, and expected to act as resistance in especially in index products. All right, so I thought that was interesting, and I posted both QQQ and SPY charts in Discord yesterday evening. All right, let's go through our positional analysis now and take a look at some charts. So we'll start with the S&P 500. This is Bookmap again, showing the ES futures. And before I dig into this chart, I'm going to take a look at a larger time frame. So this is SPX, the underlying index. And this is from Thinkorswim, showing a 20-day 1-hour chart. And these are the key levels, Spotgamma levels. So this is just showing price and key levels. And here is the put wall. That's the strike with the largest net negative gamma that can be expected to act as support. And these levels are coming in the form of a think script that you have to update manually. It takes a couple of minutes, and they're provided to Spotgamma subscribers in a number of for a number of different platforms. And I use Thinkorswim and Bookmap, and their Spotgamma provides these levels for both platforms. So there's the put wall. Then today the 3900 SPX 3900 expected to act as support. And here is the 4000 level. That is the volatility trigger. That's Spotgamma's proprietary gamma flip level, and that can be that means that below that level, traders are long puts, market makers are short puts, so they're in a negative gamma position on the gamma curve, and they have to hedge or trade against price to hedge their delta exposure. That's typical of a negative gamma environment below the volatility trigger. And above the volatility trigger, their position on the gamma curve is positive, and that means they have to trade against price to hedge their delta exposure. And I'll talk a little bit more about that in a few minutes. And then here is the call wall at 4065. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. So those are the key levels in play. And then now let's take a look at, or in, I guess, reasonable range for a few days. Now let's take a look at that. So that's a 20-day 1-hour chart. Let's zoom in a little bit. We'll take a look at another Thinkorswim chart. And this is a 1-day, 1-minute chart, again for SPX, and showing the levels that are in play for today. And this is showing here that's the 4,000 level, the volatility trigger. And then just up above that, that is the upper edge of the expected move for the week. And that's based on the options market. That's for the based on volatility and price, and that is again for the entire week. And notice that level did act as resistance, as well as the 4,000 volatility trigger, and 4,000 is also the key gamma strike, or the absolute gamma strike, with the strike with the largest absolute gamma. And then down below is the 3961 level. That is a combo L2 level. L2 means it is a fairly significant amount of gamma. The ranking is 1 to 5, 1 being the highest or most significant, most important. All right, so this is showing the levels that are in play for today, and the S&P 500 trading in a fairly narrow range today of about somewhere between 40 and 50 points. All right, so here's Bookmap, and I'm showing the same levels on this chart. I have 2 columns. This is from Spotgamma. These are the same levels. They're Spotgamma cloud notes, provided again to Spotgamma subscribers, and this is showing the primary SPX levels. There's the volatility trigger, the key gamma strike at 4,000. This is that combo level at 3961, and then the 3950 level down below. And I have my own column of levels here. Spotgamma is using a 40-point difference between ES and SPX, and that's a little bit high. So today I calculated that difference at 31 points. So I'm drawing my own levels here, and this is again my cloud notes. So there's the 4,000 level. That's closer to the actual level. Here's the ES 4,000 level, and then there's that 3961 level. Again, 7 points below where Spotgamma is showing it, and again these levels are a little bit more accurate. All right, so those are the levels that are in play for today, and we'll take a look at setups in a few minutes. All right, let's talk about shifts in levels. So there were just a few. For SPX, the volatility trigger did increase from 3980 yesterday to 4,000 today, so it moved higher. And then for SPY, the key gamma strike dropped from 400 to 390, and I interpret that as bearish. Traders are looking for and expecting lower prices. And then for QQQ, the volatility trigger shifted higher 1 point from 304 yesterday to 305, and the call wall actually shifted higher, which is somewhat puzzling given that sharp drop in the afternoon, but that I interpret that as bullish. And I will look at some other bullish signals in QQQ as well. So QQQ, the call wall shifted up from 315 to 320. And while I'm talking about that, let's take a look at what I'm talking about. This is a pop-up provided for, I look at SPX, SPY, and QQQ, showing the levels, the key gamma levels. And I look at this when I work, I'm going to move this over a little bit. I look at this when I'm working on my spreadsheet for my C levels column. And this is for all the instruments that I trade. Let's scroll up to QQQ. So I have, when I'm first looking at this in the morning, I have the levels for QQQ from the prior day, and I can compare them with what is shown on this level, this pop-up for today. So initially, when I look at this the first thing in the morning, this is from yesterday, and now it's updated to today. But when I look at it in the morning, I have the levels from yesterday, and I can compare with what I see on this pop-up. And the thing that I noticed this morning was the build-in levels up above the 310 level, especially. And recall the call wall did shift higher, but a closer look shows the build-in gamma levels above the 310 level in QQQ. All right, so that's what I was looking at in QQQ, and I interpret that as bullish. All right, let's take a look at the gamma levels now, and this will provide a better understanding of the levels that I've been talking about. So let's start with the S&P 500. These are the absolute gamma levels. All right, so RJ asked, just to be clear, the volatility trigger 4,000, you readjusted to 4031 based on your ES SPX spread calc. So what I'm doing, let's go back to Bookmap. The level, the 4,000 level is at 4,000. That's the volatility trigger. Let me show something else. Let me go back here. Let's take a look at the SPX levels. Notice here that it's pretty easy to see that this is comparing SPX with SPY, that Spotgamma is using a 40-point difference. So the 40, we'll just take a look at the volatility trigger. So Spotgamma is using a 40-point difference. So they're marking this volatility trigger on the ES chart at 4040, and that is actually still the 4,000 volatility trigger. I calculated this difference at 31 points today. So on my Bookmap chart, I'm showing that difference. There's the 4,000 level at 4031. So all I'm doing is calculating the difference in the ES and SPX, but this is still the volatility trigger for SPX remains at 4,000 until data comes out overnight, and it may be adjusted, maybe adjusted, maybe not. You know, you have to wait until tomorrow morning to see that. So that's all I'm doing. All right, so let's go back to the gamma levels now. So these are the absolute gamma levels. This will show where these levels come from, where the data comes from. This is SPX, showing absolute gamma levels. This is the 0 line, and showing positive gamma or call gamma above that line, shown by the black bars, and below the line, that's negative gamma or put gamma, shown with the teal bars. So this is obvious. The 4,000 level is the absolute gamma strike, the strike with the largest absolute gamma. And then the put wall at 3,800, the strike with the largest net negative gamma, can be expected to act as support. And then here's the 4065 level. That's the call wall, the strike with the largest net positive gamma. And just to note, that is the short call strike of the JP Morgan collar that expires at the end of this month, March 31st. All right, so that is SPX. Here's SPY. And recall the SPY key gamma strike dropped from 400 yesterday to 390 today. And that is also the put wall. So that is the strike with the largest absolute gamma, as well as the strike with the largest net negative gamma. And then the call wall remains at 402. And note the dominance of put gamma below the 400 level. And again, put gamma or negative gamma is shown with the teal bars below the 0 line. All right, let's take a look at the NASDAQ now. So for the NASDAQ, we'll just look at QQQ. NDX is not significant in the options market. So for QQQ, 300 is the key gamma strike, and 285 is still the put wall, and then the call wall moved up to 320. So this is what I noted in that little pop-up, and you can see it here too. There was appears to be a build in call gamma above the 300 level, and still there's a dominance of put gamma or negative gamma below that level. All right, let's take a look at some data now. We'll take a look at the data that's provided in the AM Founders Note. And I focus on gamma notional. This is market maker's position on the gamma curve. And notice it is negative for the SPX, shown in the far left column, SPY in the middle column, and QQQ on the far right column. So this means for all these indices that market makers, that traders are short puts, traders are long puts, market makers are short puts, and they have to hedge their delta exposure by selling futures as price drops, and as price increases they can buy back their short futures. So they're hedging with price. They're hedging with price in a negative gamma environment. And it's just the opposite in a positive gamma environment. Again, they would be trading against price. So these levels did become more negative, or shifted negative yesterday, just slightly for SPX. Gamma notional yesterday was minus 75. Today it's minus 79. So just an insignificant shift. But for SPY, the shift was much more significant. Yesterday's gamma notional for SPY was minus 1033, and today it's minus 1997. And then for QQQ, gamma notional was actually positive yesterday, and it shifted to minus 230 today. So back to a negative gamma environment for the S&P 500 and the NASDAQ. Let's take a look at the Vanna charts. And this is a graphical illustration of what I was just talking about. And what this is showing is how market makers delta notional or delta exposure shown in the vertical axis changes with price shown on the horizontal axis, and also with implied volatility shown with this green curve here. That's the current expiration. And what this is showing is that market makers delta notional will increase as price decreases. And again, they will have to sell futures to hedge their delta exposure as price drops. And then they can buy back their short futures as price increases. And the green curve is showing how that delta notional changes with implied volatility, and that is the Vanna effect. And then the black line is showing how their delta notional changes as time passes. That's for the next expiration, and that is the charm effect, the change in delta with the change as time passes, change in time. All right, that's SPX, again, pretty neutral here. SPY, much more negative. Again, recall gamma notional for SPY at the beginning of the day today was minus 1997. So this is showing that as price drops, market makers will need to sell futures much more aggressively. And then finally, here's QQQ. Somewhere in between, but still negative. Let's just take a look at SPY, and this shows that the change from yesterday to today. And notice this line becomes much more steep as gamma notional became much more negative today compared to yesterday. All right. All right, so RJ asks, when price increases on SPY, they wouldn't have to buy as much to hedge. So for SPY, it's steeper. So as price drops, they're going to have to sell futures much more aggressively. And as price increases, they can buy back their short futures. So just focus on this vertical axis, the delta notional. So I'm just looking at the slope of the line, and it's comparing SPX to SPY and QQQ. SPY is the steepest line. So again, all this is showing is that as price decreases, market makers have to sell futures, and as price increases, they can buy back their short futures. They're adjusting based on their delta exposure. All right, so the last thing that I want to look at here in my, actually not the last thing, but let's go next and let's look at some stocks now. So that was the indices, and let's look at some stocks. This is my key gamma strike list, and I track the key gamma strike for all the stocks in my watch list, mostly large cap tech stocks. In the far right column, the E column, is showing the previous key gamma strike. That's the key gamma strike from yesterday. And then I compare that with the key gamma strike for today. And I color code it red if that number decreased from the previous day. And again, I interpret that as bearish. Traders are looking for lower prices, and they're positioning themselves in the options market. And then also I color code green, and notice this is VIX. green if the key gamma strike increased. So all of this, given the rise in interest in calls further out, further up the options chain, interpret that as bearish. One thing that I do, and I mentioned my spreadsheet before, as I'm filling that out in the morning, I go through every stock in my watch list, and I'm again filling out my spreadsheet in the morning. This is part of my planning and preparation. So I look at each stock, and I'm looking at history here, the history, and I'm filling out the spreadsheet while I do that. So the key gamma strike list is just a starting point. But again, I go through all of these key daily levels, and there are 5 key daily levels. And primarily it's the key gamma strike, the put wall, the call wall, and the hedge wall that I'm looking at. So let's take a look at AMD, and I noticed a couple things here. First of all, the increase in the hedge wall and the increase in the call wall. So the key gamma strike remained the same, but these two levels increased. I interpreted that as bullish, especially the increase in the call wall, and notice that it has gradually increased over the last few days from 90 up to 110. And again, I interpreted that as bullish, so I made a note of that in my journal this morning. And then the next one that I noticed, as I went through my list, was Meta. And the key gamma strike remained the same, but there was a minor shift higher in the hedge wall and also an increase in the call wall. So again, interpreted that as bullish, made a note of it in my journal. All right, let's go on to the next stock that I noticed. NVIDIA, key gamma strike remains the same, but there was an increase in the hedge wall, the call wall, and a pretty significant jump up from 260 to 275. And notice the gradual increase over time from 250 to 260 to 275, and also an increase in the put wall from 240 to 252. And over the last 4 days, the put wall has increased from 220 to 240 to 252. So I interpreted that as bullish as well. So AMD, Meta, and NVIDIA, and then I've already talked about QQQ, the build of call positions. All right, so in YouTube, Bartos asks, what is hedge wall? And let's just go take a look at that. So I'm going to go back to let's go to the hedge wall is similar to the volatility trigger, but it is different because there's a different assumption for for stocks versus indices. So for indices, Spotgamma assumes that traders are long puts and short calls, and market makers have the other side of that position. So they're Spotgamma is assuming, again, for an index that market makers are short puts and long calls. So the volatility trigger is that shift from negative gamma to positive gamma. But for single stocks, Spotgamma assumes that traders are long puts and or long calls. So market maker's position is always negative gamma. But this, and we can go to these definitions and terms here. And this is free to everyone. So that, you know, just a simple definition, detects a large inflection point in dealer hedging activity, and it can often act as a large area of support and resistance. All right, so that's the you know, that's a quick and simple definition. All right, Ahmed, I don't know what your issue is. I don't think anybody else hears music. You're listening to something else. I don't know. All right, Roomba. I'm not sure I understand your question. To show the split bid-ask levels for Hero and explain what the numbers are on the right. So I don't know what you mean by bid-ask. We'll take a look at Hero in a minute, so I need to move on here. So let's take a look at some setups now. So I've laid out my bullish thesis for AMD, Meta, Nvidia, and QQQ. So let's start with those. So let's go to Hero now, and here's AMD. So Roomba, all right, put and call split. So first of all, the white line is price. Let's just zoom in on this. White line is price, and the purple line is the Hero signal, hedging impact of real-time options. And the purple line is showing combined puts and calls, and this is shown in terms of delta. So if traders are buying calls and selling puts, that's positive delta, and that was what is shown in the morning here with this rising Hero line. Traders are buying calls and or selling puts, and then they're taking the opposite position as price increases. They start selling calls and buying puts. That's negative delta. And so that is the combined signal. And we can also separate out and get a closer look at what traders are doing. So in the morning they were buying calls, shown by the rising orange line, and initially not doing much with puts. Then they started buying puts, but still in the morning. And let's zoom in on this. So we're just looking at the morning session. And these are notional values over on the right, if this is what you're talking about. And this number is orange line, positive, caught the edge. Sorry. Let me just point to it. It's about positive 26 million. That's notional value in dollar terms versus minus 18.84. Net positive. So let's go back to the total line. So net positive, but again in the morning, this is what I was looking at. Rising Hero line. All right, let's go take a look at Bookmap now. Go to AMD. And here's the setup in the morning. Let's just zoom in on this. Remember, Hero is rising, and I look at, I have, I'm showing and presenting on one screen here, but I have multiple screens that I'm looking at. I always have Hero or Bookmap up on one screen, Spotgamma Hero on another screen. So I can look at both simultaneously and see that Hero is rising and their entry points. Here, a couple of tests of VWAP and also the 100 key gamma strike. Sorry, wrong tool. Try that again. There's the 100 key gamma strike with the target at liquidity levels at the 102 level and 103. All right, so there was AMD. Let's zoom out and look at the entire day. So bullish setup in the morning, and it looks like price started to reverse with many other things after hitting the 102 liquidity level target. All right, there's a question, SimC, do I adjust the Hero rolling window to a shorter time frame, such as 5-10 minutes, 5 or 10 minutes before entry on an intraday trade? And no, I don't. I trade primarily in the morning, and I just leave it on the default, which is typically the total signal in a one-day look-back period. And Roomba, the right number is delta notional, and it's in a dollar terms. So it's not gamma notional, it's delta notional. And again, my understanding is that it is in dollar terms. So the thing to do is just compare the number. Positive, negative. Positive would be positive delta. Negative would be negative delta. All right, so that's AMD. Let's take a look at Meta. So bullish setup in the morning in Meta. Let's take a look at Hero. So that's AMD. So AMD, Meta, there's a very strong correlation between price action and hedging flow. Let's separate out puts and calls. And we see that traders are buying calls, shown by the rising orange line up until about 12:10. All right, let's take a look at Bookmap again. And one interesting thing to point out is the breach of the call wall here at it looks like just after 10, something like that. So first of all, there were entry points at VWAP, a couple of entry points at VWAP, and then the breach of the call wall at around 10:10. And whoever deleted that in Discord, thank you. Okay, so the breach of the call wall, and remember I talked about, as I began, talked about the call walls and the indices yesterday acting as resistance. And a couple things to note. First of all, those are indices, and in my experience, the call walls and the put walls tend to act more closely as expected. Resistance for a call wall, support for a put wall, and not necessarily with the same, I guess, high probability with a single stock like Meta. So here's Meta, breach of the call wall, and that can act as an accelerant. And Brent Kachuba, the founder of Spotgamma, has talked about this. This, again, can act as an accelerant as all of the calls at that level go in the money. And let's go back to Hero now. We can see that at that time, traders were buying calls. They continue to buy calls. Here, let's draw. Continue to buy calls. Rising orange line. And the calls that were at the call wall level went in the money. So they're gaining in delta, gaining in value. Market makers have to continue to hedge. So let's take a look at Equity Hub now. We'll take a look at, go back to Meta, take a look at the put and call impact chart. Let me just zoom in on this. So here, the breach of the call wall. So all these calls at the 200 level and at the 205 level are going in the money. They're gaining in delta. And again, remember, market makers, traders are long calls for single stock. Market makers are short calls, and they have to buy stock to hedge their delta exposure. And also note the call dominance here above the 200 level. All right, so that's Meta, a breach of the call wall. And again, the differences are, first of all, single stock versus index, and also time of day. Typically the first couple of hours up till 12 o'clock is typically the largest range of the day, whether the stocks are going to go up and down. They rally if it's bullish in the morning, and then lunchtime chop, and then a reversal. So this is a pretty typical trend day chart pattern. Strong in the morning, traders are buying calls, that levels off, lunchtime chop, and then a little bit of a reversal lower. Again, from what I know, a pretty typical trend day pattern. All right, so that is another way of thinking of call walls and the walls in general for single stocks versus indices, and also time of day. All right, let's take a look now at NVIDIA. That was the next stock on the list. And I actually thought NVIDIA would be more bullish than it was. Let me zoom in on this morning session. All right, so this is what I was looking at in the morning. Let's go take a look at Hero. And we'll go back to Hero here, take a look at NVIDIA. And NVIDIA was more choppy than some of the other stocks like Meta that we just looked at. But overall, in the morning, Hero was bullish. It also had in the morning a fairly strong hero signal, and I post my hero watch list every morning, and hero was, if you rank them from strongest to weakest, hero NVIDIA was near the top. So I was looking for more from NVIDIA this morning, but anyway, it still offered a couple of long opportunities. Let's go take a look at Bookmap again, and I'm showing bounces off VWAP here just before 9:45, and again just before 10, and then the best one here was right at 11, with the 275 call wall being the target for today. And price didn't quite make it there. It was absorbed after this last long entry just below 275. All right, so RJ asked, can we see the put call split for NVIDIA? Yeah, we'll take a look at that. So let's take a look. So pretty much the same in the morning. No additional clarity from breaking this out. And notice that as hero starts to level off here, price is starting to fall, and then starts to fall a little bit more sharply as traders start selling calls. So that good short opportunity at the call wall that did act as resistance as expected. So the thing to do is anytime you see one of these levels, call wall, put wall, any of the key daily levels, always confirm what you expect to happen with hedging flow and order flow. So in this case, let's go back and take a look at the total signal here. So this is definitely confirming hero rising, then hero falling, confirming that reversal and the resistance at the call wall level. All right, let's go back and take a look at Bookmap. And notice the increasing amount of pink dots coming in. You can see the green dots mostly up until about 10:30, and that's shown with the CVD here, cumulative volume delta in the subchart, increasing, leveling off, then starting to decrease, and then price finally reverses lower at the call wall. Notice the absorption there, and then price moves lower. So NVIDIA today was actually a better, I don't know why this is showing this chart shifted up like this. Let's get rid of this, see if that helps. So NVIDIA was a better short today. All right, then finally QQQ. So again, my thesis was bullish this morning based on the build and call positions up above current price, and there were some several good entry points. First at the 310 LG1 level, large gamma 1, also VWAP, and then pullback entries and target at the 314 C3 level. Let's go take a look at Hero. All right, C3 is a RJS. What's C3 again? That's a combo level, combining QQQ and NDX here for QQQ. And 3 is in the middle of the range of importance or significance of gamma, 1 being the highest. So a C1 would be more important, or an LG1 would be more important than a C5. So here's a C5 level, lowest in the ranking of significance, combo 5, LG1. That is indicating QQQ, large gamma level, and 1 being the highest, most significant. And then there's the C3, the combo level, C3, somewhere in the middle. All right, and just a quick note, I did an experiment this morning. You know, I've talked about I prefer to trade shares, but I'm kind of looking at trading options, day 0 DTE options, just as a way to get in multiple trades and not have to worry about entries so much, just taking a defined risk trade. So looking at just a single call option to 310, which was at the money at the time. So at this first entry point at 310, just buying a 310 call. So that was $1.40. So with a risk of $140, and then the best option I examined or tried looked at several options here. So the first at the 314 level, that was my target. I just take it off, and the profit and loss $272. And then I looked at a couple of other options. One was to sell a call expiring tomorrow. So this made a diagonal and a risk-free trade. So that what that did, and remember QQQ was up at 314. So that up here at this level, and you can look at, this is a price slice up at 314, and this is showing in this case that takes away the negative theta, so that makes a positive theta position and also a profit of 280. If price had continued going higher, that still gives you some positive delta, but also a risk-free trade. So there's no, you know, if that was the route that I chose, oops. So here, that $272, if I just held onto that call for the remainder of the day, that $272 profit would have been now a $90 loss. And with this trade, at least it would still be profitable. And so that was one option. And then that was a sell. The 315 call at 174. So again, you bought the call for 140, sell this call that expires the next day at 174. And now this is meant to be a day trade. even though I'm selling the call that expires the next day. You want to get out of this at the end of the day if this is the, and again, I'm just trying different options here, and this is another selling a further out of the money call, and then last option, buy a put and either hold on to the call, giving you a risk-free long strangle, or take off that call and buy the put, and then for a total profit of right now 553, and again a risk-free position. With a max loss of a profit of $165. So RJ, yeah, that's why I'm trying all this and showing this, is there are, with options you have, many things that you can do. So this obviously was the best way to trade this today. Take profits at the level that you expected, and let's go take a look at Hero again. And let's go take a look at QQQ. So Hero definitely provided the signal, and again, remember the 314 was the target. Take your call off, buy a put, and let's see what the cost of that put was. So 107. So even even if you lost your lot, you would still be positive for the day. All right, so you can see Hero reversing here and price reversing. Very strong correlation between price action and Hero options trades. All right, so RJ wants to see the calls and puts. And this is pretty typical of the indices, that traders are buying calls and buying puts, and all you have to do is see who's winning. So notice the delta notional value here, minus 606 versus minus 335. Put buyers are winning. All right, I'm going to go back to the total line now, and then RJ asked to see the next expiry. So all expirations are shown in the purple line. 0 DTE shown with this kind of greenish line, and I don't think it provides much. I think the total expiration, all trades, all expirations, provides a much stronger signal. And now let's wrap it up. Let's look at Bookmap. So definitely confirmed with order flow as well. Strong uptrend, break of the trend, lower highs. So your call, buy a put, and you've got a great trade for the day. And notice now QQQ has dropped down below the opening print. All right, my time is up. That's all I had. There were some other setups. Those are the things, the ones that I was focused on. And actually, let's just take a quick look at Hero for the S&P 500, and then we'll wrap it up. So this is the total signal for the S&P 500, combining SPX, SPY, and XSP. XSP is insignificant, so this is just SPX plus SPY. And this is showing traders are, first of all, in the morning, they kind of were fading this move, options traders, and then they decided to join the party about halfway through the move higher, and then they started taking negative delta positions. Price started to decrease, so setting up this nice short, and then as price continues to fall, they start fading that move and taking positive delta positions. So let's just go, we'll take a look at SPY and then call it a day. So there's QQQ, finally SPY. And note the reversal at this is the 4,000 level, this white line here, and then at the SPY 399 level. Note the shift in order flow, all the pink dots, market sell orders coming in at that level, and then price reverses higher, lower. All right, that's all I have for today. I want to thank you for your questions and comments. Thanks for watching, and I will see you tomorrow. Thanks again. Bye.